A notable development, though, is the precipitous decline in the physical silver stockpile in COMEX warehouses, which has hit a new low of almost 155 million ounces. Another thing you should know is that the COMEX isn't really a warehouse. Oh, they simply mention this facility that qualifies as a COMEX warehouse, which is owned by JP Morgan or someone else. Therefore, I believe that to be a crucial component. Additionally, I've seen a significant decline in open interest in gold futures, though I can't say for sure how this is shaping up at the moment. When the open interest is large, it indicates that the general public is actively participating in the market. It would appear that participation is low. So, yeah, and I've also seen that the SLV, the silver ETF, has made it such that you can't borrow shares from it. I believe this was announced last week and it was also announced today. How come you'd ever consider doing that? The bullion banks, if you recall, did something with PSLV a couple of months ago. Because there are a lot of individuals buying PSLV, and the trust had to acquire physical, they were borrowing shares to sell SLV in order to keep the net holdings of SLV neutral. Therefore, the swap deals or bullion banks could avoid buying actual PSLV if they could borrow it and sell it, effectively neutralizing the increase. I believe they're now attempting this with the SLV, but they're having trouble borrowing the rates that are associated with SLV share leases. It has soared to new heights. Additionally, I anticipate that the silver price squeeze will persist. As we speak, the spot price of gold is 3,400, and the spot price of silver is close to 39. I follow that person on X, you know. I've had conversations with him. I have no doubt that others will follow suit. I believe he was successful as the creator of a technology company. On top of that, he divested himself of the business. Therefore, I believe that to be the case and that it will actually transpire. Additionally, the Hunt brothers were the primary figures involved in actual silver trading during the 1970s and 1980s. It wasn't until the early 1970s that they began to take delivery of futures contracts. I think it's because they were prepared for inflation when Nixon shut the gold window in 1971, but they couldn't purchase gold. They began with silver, but when they became somewhat in over their heads, the Federal Reserve and regulators began to pursue them. It may not seem like much, but if dozens of extremely wealthy people, not just a handful, but dozens, began purchasing silver in this way, it might have a significant impact. Additionally, I concur with Andy Schechtman. I've been babbling about how the markets acted strangely, like they did the same thing at the same time every day, which isn't typical of markets, ever since I began following gold in 2002 when I purchased my first Krugerrands. Then I learned about Bill Murphy, GATA, Gold Antitrust Action Committee, and the rest is history. One of the things he mentioned was the need of physical activity and taking delivery. Unfortunately, taking delivery on exchanges like COMEX isn't going to be a picnic unless you're a major player. Rafi Faber and a few other men attempted to take delivery of a single silver contract, which is equivalent to a 5,000-ounce bar, about 2 or 3 years ago. They were ultimately unsuccessful because they made it so difficult. Taking delivery is without a doubt the Achilles heel. The bankers who run these exchange-traded funds, ETFs, are responsible for the creation of the gold ETF in 2004, if my memory serves me correctly. Plus, they came up with SLV because it discourages actual purchases, which is absurd in my opinion, since people prefer convenience over the trouble of physically purchasing gold and silver. However, that is its function. Additionally, I noticed on X today that a Japanese firm named Tanaka Precious Metals unveiled a service that allowed people to purchase silver in physical form and store it in their vaults. You will receive your monetary compensation, not physical, starting in December, or when the program concludes, according to their latest announcement. Therefore, it is quite challenging to have faith in all these ETFs and similar products. But if we're talking about manipulation here, some could wonder why the price of gold and silver is skyrocketing if they've been doing all this manipulating. My response is that they intentionally make people afraid to invest in precious metals like gold and silver by causing extreme price swings and volatility whenever they enter the market. Moreover, Jesse, I'm not sure whether you're aware of this, but in the 1970s, the United States Treasury and the State Department were in touch with London's bullion traders on the impending legalization of gold on January 1st, 1975. Indeed, according to one London trader, Americans should be wary of stockpiling physical gold due to the futures market's potential for extreme volatility and the fact that it will eventually outgrow the physical market. I see. So that's their method. However, I do believe that more and more people are beginning to realize that purchasing physical gold and silver is the only true method to acquire these precious metals. I see Mr. Bateman, the local billionaire, as exemplifying that. Oh, silver. I suppose the reason I brought it up is because the past two instances, well, the only two instances, silver hovered around $50. The dollar system was on the verge of collapse in the late 1970s and early 1980s. Bonds denominated in Deutschmark and Swiss francs were issued by the United States Treasury. Carter bonds was the name given to them. Thus, I took that as a hint that things weren't right. As a result of its long history as a common currency, silver mirrored that sentiment. Also, in 2011, southern European countries including Greece, Portugal, Ireland, and Spain were hit hard by the European sovereign debt crisis. Even though it's not in the southern hemisphere, Ireland was in a similar financial bind. In 2011, the year that the crisis began, silver reached $50. I brought up silver for that reason. This is the Japanese government bond market, or JGB for short. All the liquidity and debt that the Bank of Japan and the Japanese government have amassed will inevitably come back to haunt them, as I've been discussing on my channel for years. Mainstream economists and Keynesians have assured us that deflation has always been a possibility in Japan. Rice prices, nevertheless, have probably increased by a factor of 100 in the past year. People in general are beginning to feel the effects of this. They are aware that deflation does not actually exist. I mean a decline in prices when I say deflation. It gets a bit confusing, even though I know that deflation is when the money supply collapses. Japanese government bond JGB long-term yields, meanwhile, have recently spiked dramatically. Since Japan held its election over the weekend, we may see an even steeper increase in prices starting this week. Additionally, the ruling party's control of the Senate was eroded. There will be strong resistance, therefore that is a major concern. They aim for increased government spending. They are advocating for additional tax reductions. Even Japan's central bank and Ministry of Finance are attempting to curb the country's excessive liquidity and money printing. Thus, this is creating an additional obstacle. Investors could get scared, leading to further higher yields on Japanese government bonds. Treasury bonds and other types of government bonds, such as gilt bonds and European government bonds, could be impacted by the weakness and decline in JGB pricing. That is why I believe it is crucial to monitor the silver market and the Japanese economy. Indeed, there is an international gold exchange in Moscow as well, so this is really another Russian exchange. St. Petersburg is the site of this new exchange, according to what I read. The Russians are aware of the situation because they claim that London now dominates the market, despite the fact that the UK does not manufacture any gold. Sovereign nations are naive, or should I say stupid, enough to deposit all of their gold with the Bank of England, which allows them control. It's done that way. The Russians are essentially stating that they will not part with their gold to the UK, and our gold production is unparalleled. Our very own market is in the works. Since COMEX and LBMA are somewhat interconnected, I believe that will further undermine the paper games on LBMA and COMEX. In my opinion, they're joined at the hip, and having a market that works for physical distribution isn't really their goal. Yes, it is not uncommon for famous actors to take delivery in London. However, we view the general population as little more than a speculative object. The Russians, on the other hand, seem to be more committed to establishing a tangible market. Yes, This will keep eroding Western power, particularly London's grip on the price-setting process. Additionally, Shanghai is also engaged in this activity. The Shanghai Gold Exchange is also expanding its network of depositories. The trend, in my opinion, is toward the exchange of actual physical gold and silver. Regarding the paper game, I believe the Russians are fully cognizant. Why am I even stating that? Because Gada planned a summit, which I believe took place in the Yukon in 2005. And President Putin's economic counselor was among those who traveled there. Additionally, he learned about the gold and silver bullion bank paper games, particularly those involving JP Morgan and the bullion banks. Thus, I believe the Russians are cognizant of this, and the Chinese too. They are also aware that the Anglo-American Empire's currency inflation was its weak spot. They have managed to maintain the impression that they are valuable by limiting their access to gold and silver. Indeed, these are intriguing times. They might even spark other conversations, in my opinion. What the heck? The transcription was performed by turboscribe.ai. To get rid of this message, go for unlimited.